Most powerful breakout breakdown strategy for option buying, 90% accuracy trading setup. A powerful and effective breakout and breakdown strategy setup for option buying revolves around identifying significant price movements with high potential for follow-through. The goal is to enter a trade just before or as the breakout or breakdown is confirmed, allowing you to profit from the sharp price movement. Here's a step-by-step breakdown of a commonly used strategy. 1. Identify key levels. Support and resistance zones. Look for well-established support and resistance levels on higher time frames, daily or weekly charts. Breakouts occur when the price breaks above resistance, while breakdowns happen when it breaks below support. Trend lines and channels. Use trend lines or channels to identify patterns, ascending, descending, or horizontal. A breakout of a trend line signals a strong move. Previous highs and lows. These are often natural points where breakouts and breakdowns occur, as traders watch these levels closely. 2. Volume confirmation. High volume breakouts, breakdowns. When a breakout or breakdown occurs on high volume, it adds validity to the move. Volume shows strong market participation, which is crucial for sustained moves. Low volume fakeouts. Be cautious of breakouts or breakdowns on low volume, as these can often result in false signals, fakeouts. 3. Candlestick patterns. Look for confirming candlestick patterns at breakout/breakdown levels. For example, bullish engulfing or hammer at support suggests a breakout, while bearish engulfing or shooting star at resistance can signal a breakdown. 4. Momentum indicators. Relative Strength Index, RSI, helps confirm momentum. In a breakout, look for RSI crossing above 50 in bullish breakouts or below 50 in bearish breakdowns. In an overbought, oversold condition, a breakout can be stronger, MACD, moving average convergence divergence. Look for a bullish MACD crossover during a breakout or a bearish MACD crossover during a breakdown to confirm momentum. 5. Moving averages, 50-day and 200-day moving averages. A breakout above these moving averages can signal a long-term trend shift. Similarly, a breakdown below these averages signals a potential longer-term bearish move. Golden Cross, Death Cross. When the 50-day MA crosses above the 200-day MA, Golden Cross, it signals a potential breakout. A Death Cross, 50-day MA crosses below the 200-day MA, confirms a breakdown, 𝐕6, entry and exit strategy. Entry on confirmation. Wait for a close above resistance for a breakout or below support for a breakdown on a higher time frame, for example, daily chart. This reduces the chances of falling for fakeouts. Aggressive entry. For aggressive traders, entering when the price breaks the level intraday can capture the early part of the move, but this carries a higher risk. Exit at next key level. For breakouts, target the next resistance level. For breakdowns, target the next support level. Trailing stop loss. Use a trailing stop loss below above recent swing lows, highs to protect profits as the move extends. 7. Options strategy for breakouts, breakdowns. Buying calls for breakouts. When a bullish breakout is confirmed by ATM at the money or slightly OTM out of the money, call options to capitalize on upward momentum. Buying puts for breakdowns. In the case of a bearish breakdown, buy ATM or OTM put options to profit from the downside move. Expirations. For breakouts, select options with 2-3 weeks to expiration to allow time for the move to play out. Use weekly options for quick, sharp moves if confident of immediate price action. Implied volatility, IV. Be mindful of IV. High IV means options are expensive. Try to enter when IV is moderate but trending up, as breakdowns usually increase volatility. Delta. Look for options with a delta of 0.50 or higher for higher sensitivity to the underlying price movement. 8. Risk management. Position sizing. Allocate only a small portion of your capital for each trade, for example 1-2% of your portfolio, to avoid large losses on false breakouts, breakdowns. Stop loss. Set stop loss levels below the breakout or breakdown level, for example, just under the broken resistance for breakouts or above the broken support for breakdowns. 9. Backtest and paper trade. Backtest the strategy using historical data to validate its success rate, then paper trade it to gain confidence before going live with real money. Example of the setup. Stock XYZ is trading within a defined range between $50 support and $60 resistance. The stock attempts to break $60 resistance on high volume. RSI is above 50 and MACD shows a bullish crossover. The stock closes above $60. You buy ATM call options with 2 weeks to expiration. Set a stop loss below $60 and target the next resistance at $65. This strategy allows you to position yourself to profit from sharp directional moves, minimizing the risk of fakeouts. There are more videos in playlist if you would like to deeper dive into any points. Please check it out.